Hi, Jim Gore from THOR Investment Management. In our February update, we talked about inflation coming back into the United States, and one of your ways to protect yourself is to be buying hard assets. One of those is gold. However, we think a better investment choice is gold miners, and let me tell you why. First, if you look at the valuations of gold miners since 2006, gold miners right now are selling at a little bit over 7 times free cash flow. Historically, they've sold for 11 times free cash flow. So we are buying them at a 30% discount. Secondly, is that we know within these companies right now that the cash flow is going to grow. Even if gold just remains at $1,300 an ounce where it is right now, free cash flow on the large and mid-tier gold mining companies is going to go from about $1 billion in 2017 to $3.5 billion in 2018. So we're going to see free cash flow go up. We're buying at a 30% discount, and free cash flow is going to more than double next year with gold prices remaining at $1,300 an ounce. Now, we don't think it's going to stay at $1,300 an ounce because there's inflation. First thing is supply and demand. This chart you can see since 2010, there have been no true discoveries of new gold mine. If there's no discovery of gold miners, what it means is the supply is going to diminish. You have less supply, demand remains the same, prices go up. Less supply, demand goes up, prices are going to go way up. So we like that scenario there. The next thing is that if you buy gold mining companies, it is pretty much a leverage call on gold. What do I mean by that? If you look at the price of gold right now, it's a little bit over, it's about $1,350, but let's assume it's $1,300. The all-in cost for these companies is $925 per ounce. So what you're making on each ounce that they're selling is $375. If gold goes from $1,300 to $1,400 an ounce, you go from making $375 to $475 on each ounce sold. That's a 27% increase in earnings on a $100 price increase of gold. So we're going to make 27%. Instead of buying gold, we're going to get up 7%. We're going to be up 27%. That doesn't even take into account what we were talking about before. We're buying them at a cheap discount, and we know the free cash flow, even without a price increase, is going to rise significantly. This is really a double story here for why you want to own gold miners instead of gold.